Let's bring in Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. And as we always talk about it, Amy, that maybe derivatives and options, you wouldn't really say it's the tail wagging the dog, but you can certainly look at the tail and maybe find out like how the dog is feeling. I think, right? If it's wagging, okay. So that's a way of looking at it. You have mentioned there's a lot of calm in the market. The VIX has gone to 30 a couple times, but in general, given the backdrop, it's been relatively calm. Now you're pointing out that when the market goes down, people take profit on their hedges. When the market goes up, people fade anything they want. So it's almost like they can tell it's a trading range, and they're almost sort of waiting around and looking through what's happening. And but bullish long term, it seems like, right?
Yeah, I'll say two things, Joe. The first is I think institutional investors, they honestly just have headline fatigue. And they've also noticed that it's like the headline isn't necessarily corresponding to the market action anymore. I'll give you a really good example. On days when we've been selling off in the market, investors are taking those hedges that they have had on, they're monetizing them. So they're saying, let's take some profit on that, but I'm not going to deploy more. And then what do? They put it into call options. So they're actually positioning for a rebound. On rebound days, what are they doing? They're fading the rebound. They're selling calls. They're essentially saying, this volatility lift is probably going to go back. There's two things that happen. One is this mechanism is a little bit stabilizing. So instead of momentum begetting momentum, which I think was the story of last year, you're actually getting momentum fading momentum. And the second aspect of that is it creates this kind of grindy, range-bound market where until we have something more happen that really moves the ball forward, perhaps tonight's deadline could be that. You see investors essentially playing for the range, trying to be very tactical and very nimble. And
you said kind of the opposite of a fear of missing out and a momentum market. They're just more or less staying put at this point.
Yeah, and last time we spoke, we talked about what playbook is this? What are investors really looking at? And it's a little bit more of a 2022 market. So you think about what the geopolitical tension was back then. It was Russia-Ukraine. You did have this initial scary fear on the market, VIX really spiking. But then what happened after that? We kind of stabilized again, sub 30 levels in the VIX. Yes, the market ground down was actually down 20%, but systematic put buying actually would have drew you down 21%. We joke that was the biggest option fail in the market. Investors don't want that to happen again. That's why they're staying so nimble. And when you look further out, let's say 6 months out, what is the options market pricing? It's not pricing a lot of fear. I think that's really important because right now investors are still saying, we think this situation in Iran, it still wraps up. If that starts to change, we're going to have to see a really big flip in the term structure of the options market.
You point out that people that talk about what the president does refer to when he backs off as taco, that it takes two to, well, it takes two to tango. So Iran could make it impossible.
Takes two to taco?
Two to taco. And it is, what day is it?
Taco Tuesday.
It is Taco Tuesday. So, but the president can't necessarily speak for Iran on a lot of these things. So he may not be in a position to be able to massage the markets the way he wants.
As you say, you can't unscramble an egg, right?
Right. That's my say. Well, you like the toothpaste. I think you can put some toothpaste back in it too.
Maybe you got to really try, but
you can, but you can't. There's no way to unscramble.
Can't unkick a hornet's nest.
No, probably not.
This is why I think you get the headline fatigue. This is why I think you're ignored, and this is why I think what has been happening is very, very tactical positioning. But everyone's saying to themselves, look, fool me once, April 2nd, we got that whiplash. Remember, we got that Momo back up, and everyone spent last year chasing that. They're not doing that again. They're being very, very short term to essentially adjust their playbook.
This is the place to be. Dirtiest shirt and cleanest shirt and a bunch of dirty shirts, right?
Yeah, because if you start to look at where Mag 7 valuations are, when you start to look at average single stock implied volatility on these big names, and then you start to look at where fund flows go, if this does continue, when we talk to institutional investors, they all say, where do we rotate back to? It's back to the United States. So again, it might not be that clean a shirt, but it's certainly the cleanest shirt in a dirty pile. And I think we were actually just marketing with investors the last 2 weeks. And investors are saying when you think about the rotations that have happened, so kind of Asia or Europe outperforming, they actually think that story starts to shift. If this does continue, I think it's one reason you see S&P option skew, so that demand for hedges 6 months out, 12 months out, as not that elevated, because it's the story of, well, where do you go to when you do need to find that safe haven if we haven't seen any changes or wrap up of the situation in Iran?
So it's April. If I got that right, it's April 7th. I don't know how long this goes, but midterms, I know, are scheduled for November. Weird thing that I saw all over Twitter, that favorability is +5 for the GOP. None of the prediction markets
For the House?
for just overall favorability for either party.
Oh.
+5 versus Democrats, which, I mean, I'm not surprised, but as far as the betting markets, the House seems to be in jeopardy, right? And maybe even the Senate, I don't know, not quite as much.
Yeah, I think when I checked it, even the Senate was a little bit closer to a toss-up than prior.
Yeah.
I think what you're going to start to see is we're going to get through this earnings season that's about to kick off, and you'll start to, maybe hear dribs and drabs of commentary around the impact from the war, but the real kind of the big commentary will probably come the next earnings cycle, which is going to dovetail with your midterms. And I think you'll start to see bets placed, but a lot closer. So one reason is, the options market have become very short term, and you're not going to see those trades until maybe we're 1 month out. But you better believe that a lot of portfolio managers we speak to, that's what they're looking to next. If there's an inflection point for midterms, what does that do on a sector by sector level? And then certainly what does that do if, we flip House and Senate, or if we don't? And so there are kind of binary trades that are being deployed, but I think, again, they'll be kind of closer to the date.